Why most people lose money in stocks. It's not what you think. Some time ago, I woke one morning, and for the first time, I didn't check the market. That already felt strange. No charts, no prices, no green, no red. I just lay there thinking. Not about stocks, not about money, about myself. And that's when I realized something. Most people don't lose money because they don't understand stocks. They lose money because they don't understand themselves. Now, this is where the problem really starts. Nobody wakes up and says, "Today, I want to make a bad investment." That's not how it works. Bad investments don't start in the market. They start in moments. Moments like when you feel left behind, when you feel pressure, when you feel scared, when you feel greedy. You open your phone. You see someone posting profits. You see green numbers. You see excitement. And something small moves inside you. That small feeling is where most losses are born. Not in charts, not in news, in your head. Why you buy at the wrong time. Most people don't buy because something makes sense. They buy because they are afraid of missing out. They tell themselves, "This thing is going up. Everybody is buying. I should enter now." But that is not logic. That is fear wearing confidence. When prices are going up fast, your brain feels safe following the crowd. It feels like, if many people are doing it, it can't be wrong. But the market doesn't reward crowds. It rewards patience. By the time something feels obvious, it is often already expensive. And when you finally buy, the excitement fades. That's when reality enters. Why you hold losing stocks. When a stock starts falling, logic tells you to reevaluate, but emotions tell you something else. They say, "Just wait. It will come back. I can't sell at a loss." Now listen closely. This is where pride enters. Selling feels like admitting you were wrong, and nobody likes that feeling. So instead of making a decision, you make an excuse. You call it patience, but it's really hope. Hope is dangerous in investing. Hope is not a plan. Hope is not strategy. Hope is just fear of accepting reality. And many portfolios die quietly because of hope. Here's a hard truth. The market doesn't care about you. It does not care about your bills. It does not care about your dreams. It does not care about your effort. The market moves whether you are ready or not. So when people say, "The market is against me," that's not true. The market is neutral. What hurts people is how they react to the market. Your feelings don't move prices. Prices move your feelings. Once you understand this, you stop taking things personal. And that alone can save you money. Why checking prices makes you poor. Let me say something clearly. Checking prices every minute does not make you smart. It makes you emotional. Every price movement becomes personal. Every small drop feels like danger. Every small gain feels like excitement. Your brain was not built to handle constant uncertainty. That's why people panic sell. That's why people overtrade. The more you watch, the more you react. And the more you react, the worse your decisions become. Sometimes the smartest move is doing nothing. Smart investors are not smarter. Here's something most people get wrong. Smart investors are not smarter than you. They are calmer than you. They don't rush. They don't chase. They don't panic. They accept boredom. They accept waiting. They accept uncertainty. They know, if something makes sense today, it should still make sense tomorrow. They ask quiet questions. Why am I in this? What has changed? Am I reacting or thinking? And because they are calm, they see clearly how to think differently. So how do you avoid these mistakes? Not by learning more indicators, not by watching more videos, but by changing how you think. Here are simple rules. Before you buy, ask, am I calm or excited? Before you sell, ask, am I thinking or panicking? Write down why you entered a trade, not in your head, on paper. If you can't explain it simply, you probably shouldn't do it. Separate your money from your identity. Losing money does not mean you are a failure. It means you are learning. And learning requires honesty. Money is a thinking game. Most people treat investing like gambling. They want quick wins, fast results, excitement. But real investing is quiet, slow, sometimes boring. Money grows where discipline lives. If you master your emotions, you don't need to predict the market. You just need to stop fighting yourself. So if you remember only one thing, remember this: money is not a market problem first. It is a mind problem. Until you understand why you click buy, why you hold, why you panic, why you hope, the market will keep teaching you the same lesson, again and again. This is Mr. Nature Finance. We don't sell hype. We teach clarity. Because when your mind is clear, your money follows. And trust me, you won't want to miss what's coming next. So hit that subscribe button, join the journey, and let's grow smarter together. Your best financial moves are still ahead, and we'll explore them all, step by step.